What is your idea of leisure travel? Okay, is it like a trip to Italy? Maybe
It could be.
snowball. There
Could
you
be.
go. Rolling the dice in Vegas, maybe.
Yeah.
Hopping on a cruise. Okay, all sounds good. We want to find out the latest trends. So for that, we're going to Jody Laurie. She's Bloomberg Intelligence credit analyst, giving us this updated look. Laurie, I want to start with, let's say, cruises or casinos, because Paul right next to me here, he's a Bellagio guy, right? But one of your recent write-ups, you talk about the Las Vegas Sands. So it left Vegas, and now it's kind of focusing on Asia, Macau, Singapore. How are they doing? Was that the right move for them?
I mean, Lisa, I think it's really they think it's the right move, but I would say as a credit analyst, we're a little bit concerned because the past few years, they've given up EBITDA market share. And it's not just because they closed the Londoner for revamping. It's more of a shift, and competitors are taking over market share. And so I think the problem with someone like Sands is when they're so concentrated there, it's a little bit concerning. Now, they are expanding in Singapore, and I think over time that will be very beneficial for them. But the problem is that they had a few other potential opportunities that have sort of gone by the wayside, such as New York, where they've pulled out their bid. Thailand is sort of off the table for now, with the government not deciding if they want to actually do casinos. And so it's a little bit of a challenging environment for them.
So overall, Jody, what are you seeing just in the gaming business in general? I saw some reporting last week. I didn't really dive into too much. That last couple of months have been very weak on the Strip in Vegas. What's going on out there in Vegas?
Paul, I mean, I think what we're seeing now is we've sort of commented on how casinos have been a little bit weaker than some of the other parts of the leisure space and continue to do so. If you look at spreads, they've been a little bit wider, and I think they'll continue to be that way. And that's a function of the fact that consumers might be pulling back or selectively pulling back. I mean, there were articles talking about how expensive it is in Vegas. And so, you don't have the cheap Vegas of yesterday, you have the $9 latte of today. But I think what's more interesting is that both Caesars and MGM, but more so Caesars, commented on the effects of international travel or lack thereof, Canada in particular being sort of a challenge. And then you marry that with Marriott's results today, where they specifically point to government workers not using hotels as much, right? And that's a function of just these massive layoffs we've had in the government that have sort of gone through the system. Back in April, we talked about this at an event. I was on a panel for Bloomberg in Atlanta, and it was on Liberation Day, and we specifically talked about the risk of massive government layoffs sort of trickling into consumer discretionary spending.
And where do cruises stand? I mean, we've kind of been hearing some pretty good news from different companies, whether it's Royal Caribbean, Carnival, Norwegian. I haven't been much of a cruise person. I don't know. My son booked his first cruise for the first time.
Really?
I didn't have to pay for it.
Good. Even better.
Even better. But how is that business doing in itself?
So, Lisa, my parents actually just finished a cruise, and they would probably tell you it's the best type of vacation in their opinion, which is great anecdotal evidence for me. But I think what's so striking about the cruise lines, and this just continues the narrative that we've been saying, is that they're about a year behind in everything related to the pandemic. And so they're still feeling the momentum. So something that we did, which is sort of a new feature on the terminal, is if you go to the transcript of the company on the left-hand side, you can actually ask questions, so AI-related questions. And one of them is negative commentary. And if you do that for Royal Caribbean, it basically says, this was a generally positive. There wasn't much negative related to the earnings call. But then you compare that to like a Starbucks or a Marriott or an MGM, and it's a very different story. And so I think that sort of speaks to the fact that the cruise lines are both pretty optimistic still, but also I think the trickle-down effects aren't hurting them as much. Where we are seeing a little bit of a change, and this is something that Royal hinted at last week, is the booking lead time is shortening, and that might be a function just of younger cruisers like the millennials, the Gen Zers going on their first cruises, but it might be an overall function of people not wanting to lock in dollars now if they're not sure if they'll have the dollars down the road.
How is the credit profile of the cruise industry these days? Because I have very clear memories of right at the beginning of the pandemic, a lot of those companies rushed to the market to shore up the balance sheets.
So we're not seeing double-digit new issues the way that we saw a few years ago. We're talking more in the 5%, which is quote unquote more normal. Royal Caribbean is investment grade now, which is pretty encouraging. Carnival's working to get to investment grade like metrics, and they're on the path to do so. Norwegian keeps saying they want to be investment grade. We're not really convinced that they actually do. Historically, they never were. I think they're more picking up the narrative of their competitors, and they're not necessarily actively repaying debt, more so growing EBITDA to get there. So it's a different type of way to get to better leverage, better credit metrics, improved credit quality, and not necessarily something that's going to help them long term if we do have a little bit of a pullback from the consumer.
Jody Laurie, thank you so much. We appreciate that. Jody Laurie, Senior Credit Analyst, Bloomberg Intelligence.